Hey everyone, hope you're well. How's everyone's trading been? A nice glorious balanced day at the moment. Looks like I think there was an absorption here at 75 and 3/4, and then we've essentially ES absorbed here, then NQ's dropped, and we're now looking to go back down into value. But look at the amount of positive delta today. It's crazy. Hey Avi, how's it going, buddy? What trades did you take today? So we're just going to work our way back here to the point of control, and then that's pretty much the sweep over. But there was nice absorption, as I said, at the 75 and 3/4 price. It was just before I hopped on. With a nice smooth day trading treasuries today. It's been a good market the last week. We had a nice sweep of the high, just to open back into the range, and now we're just doing the same. Hey Craig. Hey Mr. Barbarian. Yeah, ping me on Discord, buddy. No problem. No problem at all. So I made a little adjustment on the. I need to work on this video for you guys to adjust the settings ever so slightly for the depth of market. As I feel if you're watching a number of DOMs, your performance is going to be helped by essentially adjusting the number of market depth levels, because you still get the MBO data, but then your DOMs just work that a little bit smoother. So we're going to cover that in probably the next video, I think. But yes, now the fact that we're coming back into the POC, this was pretty much the trade. You just seen the absorption, it was up at this level. I didn't catch it live just before I come on. Yeah, Avi, no, this is Sierra charts. Sierra charts, really good platform. Um, you can get a free trial. There's a link in the description. I wouldn't worry about any sort of payments or anything. I can't even say it's an affiliate link because they don't pay any commission. So, which is a shame. But just to help people out, I can assist you with the chart books if you like. So I can give you some of the DOMs, or you can watch the videos in the channel under the Sierra chart tutorials to get this set up. Sierra is really good value for money, really good platform. Pain in the neck to set up though, Sierra charts, but it's probably one of the better futures platforms for trading. I would definitely say it beats the likes of Ninja and so on. But if you don't want to go through all the faff of setting it up, because it's a very, I advise you to go and check out all the tutorials in the channel. I've got a few ones that make your life easier. Probably one of the biggest hacks is just so you can quickly put this full screen, for example, and then see I've got this very much where it's like trading view, so I can squish and drag the chart, with the hand tool, so you're really good platform once you get the hang of it all. But your hotkeys and stuff are going to be your friend, but you can set them all up. We should probably do a live stream on Sierra, but I don't know how many I should probably do a poll for how many subscribers and followers of the channel actually use Sierra. So we're currently in ES at the moment. Two real options: are we going to fill out this area right here and go back to the POC and chop around, or are we going to push up and make some new highs on the session? Do we see the market's just been filling out this lower volume area at the moment? Put this into its own profile. Hey, sorry Tony, I just saw your message. You haven't traded yet, waiting, just got off work, looking for short, missed the top. Yeah. Yeah, the top was nice. There was a really, I don't know if you guys have got market replay or whatever, you should go and check out the absorption up there. There was like 300 contracts absorbed straight in the offer and it couldn't crack, and then NQ started leading. It was a nice 10 tick risk, to be honest. And you had this sort of size up here to give you some protection as well. An ultimate target against POC, right? We're going back into this higher traded area for the day, which we're going to expect some chop. How's everyone's trading been? What positions have you guys taken so far? Wow, looking at buying, it's just come in there. The offer has been pulled. So we can see if we can hold this 71.5 area here. We just saw some buyers then sweep those few prices there. Then Q's trying. We've got the Russell, it's on the POC. So we need some movement there. So I set up a hotkey actually for demonstration purposes. So if I press Shift and Q, we will mark here was this 181. So buyers swept here. We want to see them hold this level. You can see the bid's now been slightly pulled, but they were holding this level. So let's see. With the 181 it swept. So again they've held this exact level. To note, it's the second hit of it. So right now, if this was to be buying right now, you can see the offer's been slightly pulled. If it cracks here, if NQ goes bid here, we could be potentially going back up to the highs at the moment. But they need to crack this level. If we can hit it with some size here at 72.5, then we'll see if we can get a little push up. So the bid has been refreshed, which is good for buyers right now. Continue refreshing here on the bid. It's ticked down. They need to try and continue on here. And if NQ can go bid, it should crack. And then 300 here flashed, and an MBO. Interesting. See if this trades if the market gets there. So we know at this level, 72.5, there was some absorbed. Let's see if they continually take it. See, there's definitely an iceberg at this level. Here, they're continually refreshing this price. What's up, Samar? How's it going, buddy? It's one trade, minus 3 points in ES. That's a bit bummer, Craig, but not too bad. Not. Oh, it's only an MES. Good. Okay. Okay, sweet. So not too bad then. I turned away for a second. I missed that. Okay, so we're back down to this level. We'd seen again the absorption right here. Look at the... So the market is essentially in this range right now, right? Like a micro range, right? So it was the 75.5 area. It was like here, right? So whoever cracks here with some size is going to essentially, if we break here in the sell side, we're going to maybe retest the POC back down to this area. But buyers are holding this 71.5. If they do crack this 72.75 area, so we're going to refresh and see, this is like the micro range where you're basically trading in like a 4 or 5 ticks. So we're trying again. Let's see if some size come in. NQ's going. NQ is trying hard. If it can break that level, it does not. It just sweeps 5 ticks. It's going to need to bid up here so that this can break. We're in this little micro range. We'd seen tons of absorption on the bids. It was been reloaded at this price, but it's to be expected, right? We're plus 25k delta today. That's outrageous. Here we go. Can we crack it? We need NQ to go. And it's just not going, is it? You can see this exact same price has been refreshed again, 100 contracts. So this should be going now. If you can hold here, this should be going bid. But NQ just cannot crack. Willing it on. No. Okay, still 72.75. It's price. Yo-yo, Letters, how's it going? Nice to see you, Mr. Letters. Samar, well, had a good vision of the market today. Nice. Took a ride with a big dump NQ. Dump at 9. Nicely done, buddy. Nicely done. So we've ticked down. Let's see if we can go. I missed this 300. I think that was pulled, right? The 300 that was up here. We've not even got to that price. Okay, we're now back to the bottom of this range. Our buyer's going to hold. They're trying. See this 72.5. Look at that, planting 100. Let's see if sellers take the full amount. They do. Interesting. Okay, if some size can come in here, we should see all the longs here potentially liquidate. If we can come in with some size, we should see a little bit of a flush down. But look at this, continue refreshing on these prices, and then they've hit it again. This should be going now. NQ's trying itself. Again, they're trying to hold it up. They've just taken 100 here and 100 there on this price at 17.75. Sellers are getting aggressive. Here's a little flush down potentially. Oh, you did. Nice. What all did you do, Letters? Do you see these large firms here? They're just literally, they've just put, I think it was 100 here, 100 here. Now they're placing 100 here. They're still extremely happy to buy these levels at the moment. Let's see if the sellers want to take it all if they do get down here. You can see sellers are starting to come in. It's the first sign of a little bit of negative delta. So essentially now with this range we drew up, right, the sellers have cracked to 71.5s and buyers are still taking some absorption. But ultimately, if you're selling, price should not be coming back, really above 72s, to be honest. Certainly not above the 72.75. There we go. There's a sweep down. We're obviously going to see a bounce off POC here. Yeah, always the same. This is why holding into POC, you pretty much, I always try and get out like a tick before POC, to be honest with you. if I'm targeting that 1 or 2 ticks before, because the first hit of POC always tends to pop off it. Very rarely do you see a high traded node like this just smash right through it, unless there's news, but that doesn't really count. So every which way we're breaking out of this micro range for 5 minutes, we've seen all the absorption on both sides, and the fact that the sellers, the buyers absorbed here and here, and then they got up to this price, and there was not enough aggression to take it up. Then when it comes down to this level, and if it cracks this 71.5 level where all the absorption was, you're then going to see this sweep down, which is nice. And we're now trying to just go back to the POC level. My trading was good, buddy. So I traded ZB and ZN today. Relatively painless life, to be honest with you. My trading, I took a trade this morning, my time, and a trade afternoon, my time, just about half an hour after the bond market open, and that was me done. You know, it was a really straightforward day. To be honest with you, I like it when they're really simple like that. I don't really need that much on treasuries when I'm trading with some size. Um, I trade anything from probably 4 to 5 contracts. Um, if I'm trading ZN or ZB, and I only need like 3 ticks, to be honest. What do I think about fair value gaps, John? Not too much, buddy. I would say if you use fair value gaps and put order flow into your trading, they may be helpful, but just doing random candles, and because there's a gap in them, um, there's an edge in a random gap. I mean, do you honestly think large market making firms that are trading billions of dollars a day give the smallest how do I put this? I was going to say small. They basically are not giving any thought process to what ICT says. Put it that way, right? Every one of ICT's followers could go and hit ES and buy right now, and it wouldn't even take it a tick. It's like anything, man. When I started trading 10 years ago, there was a there was a different craze. It was like market maker methods, and also the market maker method and ICT, which are all the same thing. There's rehashed terms. They came from Forex and CFDs. They don't trade futures. I know they've tried to transition across to futures, but they're just it's just candlestick patterns or whatever. You know, if anyone can say that a random candlestick pattern and draw a box over it is an edge in the market, it's what I can understand is if you identify those levels as levels to do business and confirm them with order flow, that I can get behind because you're refining the entries. If you took every fair value gap, I mean, you would lose money or whatever the case is. That's just my 2 cents on it. You know, things things in trading, the we as traders and people ideally want to have a set of variables that need to happen in order for us to take a position. But sadly, trading doesn't work like that. Because if it did work like that, we would just automate the system and go to the beach. But sadly, all the low-hanging fruit for automation is done by the largest market-making firms for patterns and recognition, and they're basically looking for standard deviations across multiple markets that affect the mean, and they can do that in milliseconds by the time we've turned our head to the left, you know. So the advantage that we have in trading over it is, we can use a discretion, right? They have to be coded by people. And I just don't think there's a lot more to trading than just saying trade in a kill zone and uh, look for a fair value gap or something. Do you know what I mean? It's just my opinion on it. I'm ranting here, guys, but uh, just the way that I see it. But for all intents and purposes, not saying this is the thing. I honestly couldn't care less what strategies people use. If you can make money, great. I'm not here to teach people a strategy. I'm here to try and get people to see the market in different perspectives, to help you refine your entries and exits, and to try and get you to see it in an overall different perspective. Geez, NQ is dumping right now, but they're continually, his price has been dropping like 4 ticks. They've been taking 100 lots here, and let's see if sellers are taking it. As soon as sellers stop to take these 100 lots, every 4 ticks, there's a firm that's just printing 100 lots in one clip. Um, so sorry, letters. So you're saying a new control bar design? Okay, okay. I detach all my charts. I don't really look at that. You've now floating on the chart and some mouse. Oh, the keyboard, mouse and keyboard shortcuts are where it's at. So install the software to check if my computer system time is lagging or not. Here this could affect Sarah's time. But if you do that, isn't that a negative RR? Samar, sorry, I've been off in tangents. What are you referring to, buddy? So my objective obviously is long term. You need to have a positive risk to reward, right? But my idea is, say you give a 10 tick stop and you get in the trade and you instantly realize that the order flow is now changed, right? As soon as you get in the trade, you need to always remain objective while you're in the trade. And if you realize that, for example, say like up here, right, you got long, and then the market was absorbing and refreshing here, and then just couldn't crack, and then you saw NQ dumping. Well, that shouldn't be happening. So there's no point of you just holding to take your stop. You just get out. Do you know what I mean? So if we can, let's see if we can break POC here. DJ Extremo. I've heard some people look at the polar. Basically, that is that not to do with automated trading and stuff? I've had a crack at automated trading years ago, and basically to take what I look for and try and automate it. I had something that produced signals, but the trouble is, like, you just never stop curve fitting and adjusting the stats. It's hard because there's so many things that you take into account with trading, which is like, what's the range been today? Where are we in the monthly profile? What's cumulative delta done? You know, are we in balance? How's the market been in the previous weeks? How are correlations in the market? How thick is the book today? Have we already hit this level 3 or 4 times? What news is there that's coming out? What's the Fed sentiment at the moment? You know what I mean? All of that takes time and years to just get a general feel for the market, and you would be there forever trying to do that. You need to be. These types of things are why they're done by firms with huge amounts of resources, and they put the algorithms out in the market, because you need the best PhD coding dudes in the world to write something like that, man. There's so many variables. All right, so you're saying if you were taking about 4 or 5 contracts and only taking 3 ticks. Yes, sorry, Samar. Yeah, so my stop on treasuries is 3 ticks. So if it goes quickly and it sweeps some prices, I'll potentially cut off a few and then let the others ride. But when you're hitting some size in treasuries and there's tons and tons of volume sitting there, you don't need many ticks. It's like ZB for example, it's 31. I'm just rounding here, but ZB is like $31 a tick. So if you're trading, 4 and 5 contracts on ZB, I'm only needing like 3 ticks. If I've got 4 contracts on there, and I'm taking that and copying it across multiple accounts, that one trade is the guts of, it's the guts of $400, and I'm copying it across. I only need one trade. But yeah, so of course, and typically in treasuries, right? If you're, I manage the trade by hand. My absolute hard stop on these things is like 5 ticks. And but if it does, say for example, it ticks like 3 ticks against me, right? And then I see that the offer has been pulled, and in the likes of ZN and ZF are also sitting pretty weak. I'll just get out. There's no point in taking 5 when I can take 3. Yeah, yeah. Wow, this is dumping. So this is the glory sell-off. This is now 24k delta. All these people are now liquidating right now. So that's one of the signs you need to watch out for when delta's this high. We are plus 24k delta in a day, and yet the market is just literally not really done anything. So all these people have to liquidate at some point. It looks like it's happening now, but look at NQ is trying to take everything up. So do you mean the market maker methods, Barbarian? Like from years ago, if you've been trading for a while, the guy was Steve Morrow. That was like 10 years ago though. I think he's still around, that guy, but like a lot of the stuff is like, Chinese medicine and things. They just, the thing about order flow is you can't, I can't tell you this is a floating turtle soup, whatever. You see it. You know what I mean? It's not gonna. I can't make up absorption. Absorption is literally in your face. Do you know what I mean? I'm not gonna rename. I'm not gonna rename that. Do you know what I mean? Like for example, if you see price comes here and then they can't crack it, you can see 88 traded, for example. You know, I mean this is not a great example, but I'm just trying to put it into context for you. Mhm. Yeah, look at that. Wow, we've just swept right back up as well. And this is why um I much rather take trades and get out for like 20 ticks, for example. If I can take 20 ticks in ES, great. To be honest with you, trying because the thing is, when was the last time you ever seen ES dropped 40, 50 ticks without going down, doing this nonsense, and then consolidating and then back down? Do you know what I mean? You're better, in my opinion, just from my experience, when a 20 ticks is on the table like that, just take it, because it can come right back to your entry, especially when the VIX is that low, and then you're sitting there like, man, I wish I should have took that. If it gives it to you in a painless trade and you've not been in it for a while and you've not had to use any mental capital, just take the margin, add it to your account. And here's the thing: when you're trading order flow, you can just get in again. Take. I'm not advocating if you're up 2 ticks, take the money. I mean, I'm saying if you're getting 20 ticks and it's been painless and the market's dumped, just take it. There's no reason getting greedy and holding to 40, because the market just doesn't drop 40 ticks without pulling back, especially in ES. And with APEC, yeah, you can trade. If you trade with Rhythmic, Craig, you can trade treasuries. I think with pretty much any prop firm, to be honest. It's not the prop firm that controls it. It's the data. Now I don't use. I have a personal account um with EdgeClear, and I have got a number of platform accounts, and how I work it is I copy trade and I have it with different instances in Sierra. So when I'm trading, I have the different instances, one for effectively each firm, um, and one for my personal account. And I tend to be like anything, the prop firm accounts I tend to size up a little bit more because it's not my money at the end of the day. So look at that, we're now right back at POC. How interesting. Hey SP, good to see you, buddy. Nice of you to stop by. Yes, Tamar, I'm glad you think so. And to be honest with you, my trading, I value painless trades a lot. I really do. Um, I would rather take a position and it's painless and not have to sit through it for 20-30 minutes of pain because the difference is I manually watch all my trades, right? So when I'm in, you know, well, 95% of the time, because if the order flow changes, I'm out. You know what I mean? If something starts happening, like say ES is a bit of a fickle beast to trade. I mean NQ you need to have balls of steel to trade NQ on order flow anyway. You need to much wider stops. But for example, right now, sellers they've just cracked there. They should be breaking here right now. They should be cracking and continuing down. So this level, we'll put another line here. If it would work. Okay. So you see the market then, this is the trouble with ES, right? Like right now they're now absorbing in that price. Sellers took out that price and ticked down like 5-6 ticks, right? This is now not a good sign if you were selling. This needs to crack here. Someone is absorbing here over 250 contracts at this price. And if you're selling, you need to be thinking to yourself, okay, this needs to go, and we need correlations to happen. We need NQ to be going, but it's going to hold in the market up, and this should be going. Right, this is better. So we're now back on for this price, right? And then ultimately, I would maybe be looking to target the level that we just went down to, so the yellow line. So I'm constantly monitoring price as it goes on, because realistically, the market should not be getting back up here in this sell position. Otherwise, something has changed. Sellers are getting aggressive. If NQ will clear NQ. If NQ goes down more, this should be going down to roughly this yellow line sort of area, like so. But you notice with the S, it always goes down 3 ticks and then goes back up 2. You need to see them continually hitting into the bid, and then you need to see the offer refreshing. So if we're doing that, like here, you want to see them, there we go, they're refreshing, and you want to see them hit into the bid and then take out the next level. Thanks, Dimitri, my hype man there. Mr. Dimitri is my hype man for hitting the like button. I like it. Yeah, have a look at treasuries, buddy. Use ZF, ZN, and ZB. They're all positively correlated, and it's different parts of the yield curve. So this is good. We need to see these levels crack here. NQ is helping. If it can go a bit lower, then we should maybe hit the yellow line. But not great that we're not seeing it break. It's a difficult market, yes, to trade, honestly. And you need to spend time with the specific markets. You need to have got one that suits your risk profile, what you prefer. You know, I know I've been talking about treasuries a lot recently, but it needs to fit your style. So we're happy to see the size here. Now sellers are saying we're going to hold, right? So if you were still holding this, if buyers take out this level and maybe print above 67s, your short's no longer a thing. For example. Okay, so you see that the buyers didn't take that whole uh, that whole amount, and sellers are dropping down, and buyers didn't take all of that. It's a good sign for your sell position. If buyers were really aggressive and wanted to get in, they took all of that liquidity there, but they didn't. And then NQ is also going, so you're helped with the correlation there. Ultimately, you want to try and be getting out, especially down. We're now approaching the value area low as well. Yes, dudes and dudettes, if you could hit the like button for me, that would be fab. Here we go. NQ's helping. Okay, we're pretty much nearly at target here. So we need to try and this level. Let's see what happens when we get to the value area low if we get there. But our yellow line is holding strong. Right, so we'll clear this. But it's all these little things you need to be watching out in the depth of market, you know. And I'm not really a fan of when people say, just because the market goes 10 ticks offside. If you're trading order flow, right, and your bias was short and the market breaks above the POC, for example. So say you were short here and you're thinking, oh, okay, and then it goes above the POC. Clearly, your trade thesis is not correct because if you're saying the market's going to go down here and then you're 10 ticks offside above POC, that's not a thing. Do you know what I mean? That's then you just need to take plenty of hopium to try and get the trade back because you're not bringing the trade back. You need large firms and huge market making firms start aggressively hitting into the bid to bring price back down to you. So that's what I'm saying. I never advocate you should have a really negative RR or whatever. All I'm saying is when you get into a trade and you realize and you see behavior on the depth of market that is not conducive to your actual position, get out. Because this is the thing, you can just re-enter. There's no point taking a full stop if you don't need to, you know? But yeah, for anyone that's not yet subscribed, if you can push the subscribe button for me, much appreciated. NQ is trying to take everyone up. So let's see if they can break this here, if they can break 66 evens. Seen 300 contracts absorbed there, and then they've just taken it up another 3 ticks. So what markets does everyone trade? I tried to do a poll. I don't know if anyone's answered it yet, but I did a community post. I just want to see in general what people are trading. You know, is majority everyone just trade ES and NQ as the most popular products. MNQ, nice. What's when you're trading MNQ? What is your sort of average take profit? Because with the commissions in there, I mean, NQ is pretty rough with a tick to commission ratio. If you've watched the recent video, but MNQ is pretty rough for the tick to commission ratio, so you obviously need to be taking quite a wedge when you're, you basically need to be taking, uh, the guts of like 2 ticks on MNQ. Not saying anyone goes for 2 ticks in NQ, but you know, you need to be taking 2 ticks just to break even. Commissions are pretty heavy. ES and NQ, but interest in treasuries. NQ used to trade cable. Good man, Craigie boy. Good man. Yeah, I've traded cable quite a lot. Pretty aggressive at London Open, to be honest. Extremely stop drive market. Like it trades quite like ES in my opinion. What I mean by that is it loves to sweep levels. If you bring up cable and you draw like the overnight session and you draw previous day high and previous day low, it loves to aggressively take levels pretty hard and then reverse back. It's a good market for that. MNQ and NQ. Nice. Very nice. Yeah, so I trade ES. I don't really trade NQ to be honest. Um, I think if I was to trade it, it would either be one contract on NQ or maybe like 5 MNQ for a day trade or something. But to be honest with you, it's I you know I like to for the positions to be. I prefer markets where they're calmer. You can read the flow coming in. It doesn't bounce around. You know, crazy. Um, and the tape's easier to read as such. And sometimes I'll check ES. At open, and if it gets to a level, then great. If it doesn't, then I've already probably traded treasuries because I typically try and trade treasuries in the first. It opens at 8:30 US, so it's roughly about half one in the afternoon for me, which is a good time. And until the bond market open, which typically causes some movement in ES and or in indices anyway, um, it's very mean reverting. So it's a very simple market to take a couple of ticks. Not saying it's easy by any means, but when you're reading the order flow well, and the correlation is extremely important in treasuries. So you basically have um, the short, middle, and long end of the curve. So you've got I don't go as low as the twos, but I have the 5 year, the 10 year, and the 30 year bond. I mean, I do at occasions. I have hit up the ultra bond. It's the most illiquid part of treasuries. Tick to commission ratio is great, but yeah, it's quite a volatile one when it comes to treasuries. But I would probably recommend everyone starts with ZN, and the reason being, if you're trading treasuries, if you're used to trading NQ and you go to treasuries, you're going to be bored out of your mind. Just simply put, it's a completely different market, completely different. If you're trading ES, it may be worth to then chuck in some treasuries because I was always a specialist for ES for many years. Um, and I found myself sometimes where I would be taking trades, but now that I add in additional markets, um, sometimes I just don't need to take the heat on ES, especially when the VIX is this low as well. And I am very much a sort of mean reversion trader, but if treasuries, for example, hits the high three times just before bond open, and it goes up to bond open, you've got correlations across the board for hitting the high. If it does break the high, it will take the prices. It doesn't normally have like ES can sweep the high like 10, 15 ticks and then just revert back to the mean. Treasuries don't do that. It's not the same. It's not the same. So it's different markets, and this is where you need to learn different markets, and you need to one that suits your style. You know what I mean? And also suit the different market conditions. So I'm just trying to provide different perspectives for everyone because you don't need to trade just indices, right? But yeah, currencies are a good one, Craig. To be honest, wow, NQ's hitting there, the instant tick back up. Sellers are trying to get that down. Um, Currencies are a good one. would say the commission is a little bit higher for, well, NQ is dropping, so is the Dow and the Russell, they're trying as well. ES is not really affected, and then NQ is just ticked up. Wow. See, this is why I don't trade NQ. How are you meant to read that? It was down here, that's just moved 20 ticks in 3 seconds, guys. Absolutely wild product. Wild. You know, it's funny. I was pointing at NQ there with my finger. Jesus, I've lost the plot. You guys can't see my finger. So I see there's 22 people watching, and there's not that many likes. So hit the like button, please. Helps out the channel. Helps all that YouTube algorithm nonsense, you know. So I'd appreciate if you could do that. That would be much obliged. And if you're lurking and you've not said hi, say hi. Yeah, see, this is the thing, SP. I think I probably need to combine the ticks, to be honest with you. But it kind of in Sierra, I need to adjust the volume profile and things. Yeah, I'm with you. It absorbs over like 4 ticks. Completely. Completely agree. I'd probably need to adjust it. I've tried to have a look at it in that way and maybe at least maybe put it to 2 ticks. But it kind of ruins the volume profile a little. I need to do a little bit deeper dive into it. Is the terminology. But yeah, this is the thing. I would need to like I was saying there. NQ absorbs and takes prices probably over like 1 to 2 points, whereas ES you're 1 to 2 ticks. So it's just easier in the eyes for me personally. I mainly use them for correlations because when NQ goes, it tends to affect how the market is. Like Russell is dropping and NQ is now making its way back down, for example, and ES is not really moved. So if NQ can continually go here, we should see this tick down to the yellow line. So it needs to go. And if it ticks back up, then it will take the others. Let's see what it looks like. And the spread is there's also quite a big spread in NQ as well. Yeah. So we need it to go. And it's not. So Craig with euro dollar, yep. Main currency that I've traded is euro dollar and pound dollar. These are the two main ones. I've participated in the carry trade before, buying uh, a dollar yen just for the carry trade because you get if you just buy it with not really very much leverage and hold it for the year, and then you basically get paid positive swaps with a decent broker. But I've only ever did that in CFDs or FX. Here we go. See, NQ is trying. Just cannot seem to break this level, can it? Here. But notice though, the Dow and the Russell are just not really moving. So this is, if NQ can crack this sort of 65 to 66 range here, we could see a little bit of downside. But it looks at the moment like, I wonder if we're going to get a sweep of the overnight low and then back into value. It would be traditional. It would be traditional ES. Sweep the high, back into the range, chop around a bit, sweep the low, back into the range. Textbook stuff. Let me know if anyone else has got any questions. So until we really either break the low, so now that we're right back in basically today's value area and at the POC as well, in my opinion, the trade was up here to take back in. Now when the market is in here, would you guys be trading anywhere here, or because I can't really see an edge when the market's here at a POC, right? I think it's pretty much guesswork, to be honest, at this point. John, how's it going, buddy? So, you mean what's my what platform and stuff am I using? Is that what you're meaning? If that's what you're meaning, I'm using Sierra Charts as my main, well, not my main platform, my platform that I use. Okay, let's see how the Dow reacts at this hundred lot at 200s. Should see the market bounce for this down here. 100 lot is quite a big size for the Dow. Ah, okay. Entry. So if I'm trading ES, I typically look for a sweep of the high. Okay, sweep of the high, and then I look to see buyers being absorbed on the offer if it's sweeping the high, and then I look to see if correlations come in, and then I look to get short and just ride it back into the nearest inflection point, so the low of day or the POC. So for example, up here we broke the high, we started to then see absorption, and you want to see essentially then some negative delta come in and sellers start getting aggressive, and then your ultimate stop is going to be above the high. That's pretty much it. When the stuff is in the range here, I don't really get involved, and that's typically what my setup is. That's when I'm trading ES. I don't really take positions when they're in the middle of the range. If you did, you'd end up trading in this, and you just get chopped up. Because right now this looks like this could go down, but in order for this to dump here, we need NQ to start aggressively hitting the bid, which is not. So ES is very typical where it go down 4 ticks and then back up, So you don't get this clean movement a lot of the time, especially when you're at the POC. So if you watch the key support and resistance levels, I discussed some of the entry techniques on there. If you watch that video, John. And then really you're looking for sweeps or absorption. You're using delta as a confluence as well. What kind of day type are we in? You know, and that's for indices. If I'm trading treasuries, um, where have we been in the previous day? How is the correlations looking across the board? How many times have we hit the level? And I would maybe look to take 3 or 4 ticks or something, and that's it. Treasuries, I would be more likely to buy a breakout than I would on ES. Put it that way. Yeah, so anything out this range, if we can catch a bid. Yeah, exactly. Exactly. I mean, we need to see. Right now, we're right at the day's market profile POC. So you can't. People anticipating long and short positions in here are just a complete and utter guess. In my opinion, you might as well just toss a coin right now. You know what I mean? And the thing is as well, there's a bit of size that just come in on the sell side there. If if the market does go down, people would be like, oh yeah, it's because of the strategy or whatever. You know what I mean? It's just we've really no idea. Sellers are trying though, but the trouble is when you're at the POC and at this sort of high traded uh, area. So if I put this back to a non-composite, sorry, to composite profile, this is a bell curve, right? We are right bang in the smack of the middle of the bell curve. And a bell curve basically is just to do with the distribution of where volume is and where time and volume is in here, right? You guys get that? And obviously, the thicker part that you're in, the more volume and the more money, essentially, that's been spent in here. So when the market is in these prices, when it gets far away from it in a day of balance, people then see this as undervalued, so they buy it. And if it gets up here, then they see it as overvalued and they sell it. And where do they target? Back to the middle of the bell curve. This is a textbook example of a balance day. And when the market's like this, going for breakouts in anticipation is just not it, to be honest. You know? So when the market's here, no diddling. Nope, none of that. Wait until it gets to the extremes and then you fade it back in. What do people think? Is that how they view the market? Well, it'd be interesting to hear your concepts and thoughts. And also, I've never really been a fan of like this whole channel trend line stuff. Just never really been my thing, you know, because you can draw them anywhere. I mean, there's so discretion, or just like I don't know. See if you started, say we do a line. You know how people do this. They're like, okay, so here's some sort of trend line that I now know has happened because it's already happened. And then, how else would you draw this? Okay, let's do another one. I just don't view markets in this way. So I would then draw this and then basically match it up. Oh, okay, look there's a channel. Look at that. There's a channel. And what happens in upsloping channels? They break to the downside. Oh, look at that, we broke the channel. Okay, great. People trade like that. But then realistically, this is not a thing. The market just swept a high, and then went back into balance. Do you know what I mean? This is how everyone has their own weird. Everyone's entitled to their opinion. Free world. But this is how some people draw the things. They draw this here, they extend it out, then it got roughly into this sort of range. Whatever. And then they think it was the trend line or the channel that broke or whatever. You know what I mean? Oh, the market broke the channel. Then we retested and sold off, and then we went back up and then hit the high, and now we're breaking it back in again. You know what I mean? Yes, exactly, Kevin. Kevin, buddy, that is exactly it. That is exactly it. So you're looking ultimately now. You've got the overnight low, okay. Now I'm not going to start promoting these indicators to you because I've got a paid one. But ultimately, this is a strong support level down here, okay. Coupled by this thick. I've got an algorithm running that effectively. I really need to sort this mic out. It keeps dying. Um, I've got this. Basically, this is a strong level. Okay, it jots down with a math edge on effectively the pivot levels the fib levels, and it gives a rough idea. Do I take positions just solely off these levels? Absolutely not. No chance. It has to have the confluence, and I take my trades when it comes to order flow. So my thesis is going to be, so if we get down to this overnight low, okay, we're essentially outside of value for the day. We've got this untraded sort of level down here. So what will happen is if we can crack the initial balance low and we hit with some size, the market will aggressively hit in because there's not been a lot of volume, and the market, there'll be stops down here. So if the market does get down here, it'll aggressively hit into the bids. We'll see a sweep, and then likely in that sweep, we'll then take prices below here, and then we'll probably come in to somewhere round about here, this sort of level, right? And what you're saying, well, how do you know that? Well, I don't know that the market may not get here, but if it does, I'm going to start paying attention when we do get down here, because this has been the low of the session, right, of the regular trading hours. There will be tons of stops. So if the market takes initial balance, whoever is taking it down here is like, well, I don't really need to spend that much more money to basically take everyone out. And then if they get here, they're going to see a cascade of stops trigger, and then hit the lows, for example. So then when we come down here, the market should snap back. We should come down here with some size, and it will aggressively hit into this level. Then we just snap back, and you should be in and out for 15 ticks in like a couple of minutes. That's the sort of perfect trade. Or it's a bit slower when it breaks the high like this, and then you need to see tons of absorption where it happens over a period of time. These ones are a lot more painful, but they're still setups, of course. But you maybe take a stop here because the market goes up. Okay, you see absorption happening. You maybe get in here, and then you maybe take a stop, for example, depending on your how tight your risk is going to be. But you maybe take a stop, but then when the market does go back into balance, you're taking enough to outweigh the stop, pretty much. Good question, Kevin. That's the general sort of idea. Right, get shit off my chart. These random lines. Filled 63s. Oh, I'm hoping long. Yeah, works in every single market. Doesn't market the it doesn't really matter the setup. I would say it works better in slightly more liquid markets and markets than like it doesn't. I wouldn't say the sweep like that works the same in treasuries. You know, treasuries doesn't tend to do that as much. It won't like sweep the high for 5 ticks and then reverse back. I mean, it does on occasion, but not very rare. Like if it breaks out of a range and it's been in that range for 3 4 days or whatever, then yes. But it doesn't have this smash the highs, absorb back into value, smash the lows, snap back into value. That's all ES does. It either trends for a day or it has these balance days. That's pretty much it. And your job is to try and determine which day type you're in. And if you're in a balance day like this, you do not take breakouts. And if you're in a one time frame trending day, you do not fade. That's pretty much it. I hate trending days, especially ones where you've got like delta like this, where it's like plus 25k, and then it's just a continual grind of death higher because you can't get in. You know, it's always the same when the market's like that. You do just need to close your eyes and buy. So when the market's like that, when it's just one time framing, if you got in at the start of the day and it's trending, then great, hold it. You know, but if you don't, then don't fade it. And then when those days happen and I miss opportunity, I go to something when the stock market that's trending. I normally go to like treasuries. Um, it's like that because I suck at those type of days. Hey buddy, glad you're enjoying it. Hope I'm not butchering your name. Is it I'll call you Marty. Is that cool? Martigen. Hope I've not butchered the name, buddy. But no problem. Feel free to ask any questions and how you look at it. But that's pretty much it. And how I look at as well, I'll zoom out. So I have the monthly profile up here, and this just gives me an idea. So this is the monthly point of control up here, right, where the most volume has been conducted for the previous 30 days. And now right now we're filling out this lower volume area, and right down here is the out of value for the month. So the further we get down here, the more appealing it gets to start taking long positions. Because the next part here, right now, if I zoom out a wee bit more, is we're getting to this higher traded volume area right now. This level here. So, and also this higher volume nodes. So it's starting to get quite an appealing area to start taking long positions. Martin is a nice one. No problem. Nice for you to join us, Martin. Appreciate it for joining the gang. If you notice right now, a candlestick looks like this is just going down, and you would see, oh, you shorted here and then it went down. But look at the pain here. Once it gets to this POC, it's in no man's land. I mean, this could go down, it could go up, it could go sideways, it could go backwards. No one really knows. And in my opinion, anyone that's telling you that this is going to go down from here is probably making it up. Unless you've got enough money to come in right now and sell 5,000 contracts and make the market go down, that's the only way you're going to know it's going to go down. Pretty much. And even then, if you started selling 5,000 contracts, you'd probably still get done because you would take the price all the way down here, and then I can guarantee you the algorithms are going to instantly bring it back up into where it was. Do you know what I mean? Because they'll see, holy, this is out of whack. Because everything is correlated, right? If you see 5,000 contracts, this is just an example, right? The numbers are arbitrary, but if you see 5,000 contracts come in to ES and someone aggressive hitting into the bid, that's going to bring everything else because everyone else sees that in different markets, and it causes a cascade of just different positions come off. It'll maybe cause if you were to hit 5,000 contracts on ES futures right now short, you would probably bring down some of the underlying stocks because everything jumps. Everything is interconnected to each other. The underlying would be affected. You'd affect the option prices. You'd probably affect the underlying stocks. And you need to start thinking about, if you had that power and that amount of money to move the market, you can cause mayhem in a day, but not too much mayhem because then you'll get caught. But you could say, right, I'm pretty long Apple, for example, and you aggressively buy Apple shares, it will probably pop up the price of NQ, right? But then you want to get filled on NQ, on your shorts in NQ. So if you buy aggressive into Apple, you're already net long Apple anyway. That will probably cause a surge in NQ that allows you to get filled in the offer, right? And then in that process, it will maybe take some stops, and then actually you get filled in your short positions in NQ, because ultimately you're already net long Apple and you're looking to hedge off some of your position. Do you know what I'm saying? That's typically how the market works. That's a really simplified way of explaining it, but it just tries to get you into the mindset of, it's not just these four charts. There's options behind it. There's underlyings. And you've got no way of knowing the case. Just know that these people have more money, more resources, better equipment, better technology, better latency. So you just need to be aware of these things and put it into perspective for your trading, right? And be aware that if the market is going up to these levels, always expect the market to take a little bit more than what you think it's going to take, because that's the hard part. When they do get down here, if they do for the day, right, and they hit here, if they take this level, stops are going, so the market's going to go further short. And then while they're at it, the people that are then also holding to the low of day, they'll take the level further short, right? And you don't know how much they're going to drive it down. Does that make sense to everyone? Nice. Yeah, the Telegram alerts are really good. I don't know if you. I just think I should really redo that video, to be honest. But the Telegram alerts are pretty handy with the bot, and you can take a snapshot of your chart and stuff, and it just gets pinged to your phone. It's quite handy. No problem, Craigie boy. No problem, buddy. Good for you to stop by. Much appreciated. Much appreciated. Just going to pop this in the chat for anyone that would like to support the channel. And I'll pin it for you. If you join this and you join the Discord, you get to join the coffee gang. If I could pin it, that would be great. If anyone would like to show some additional support for the channel, that would be much appreciated. But feel free to let me know if you get any other questions. It's no problem. That's why I'm here. Do you? One of the things that I actually do, which is quite handy. Let me. You can turn on alerts if you're trading. If you're trading, DOMs SP. If you've done this, but you can go into your time and sales, and you can basically set alerts for like a decent size. If that makes sense. So you can like, it will say ES size hit the bid, for example, and then you can filter that so that like you want to know when, I don't know, a 500 lot comes into ES or something, or you want to know when a 100 lot gets executed in NQ or whatever the case may be. You can filter those alerts, so it'll give it to you in your ears or whatever, or your speakers, and let you know that there's some size coming in. And to do that, if you go to trades, open time and sales, let me just, where's, it's chart, isn't it? Yeah, chart, open time and sales. We then need to drag this up. Okay, so this is the time and sales window. You can see it's not, I don't think there's many filters on here, but I'll just show you this as an example. So this is the time and sales window. It's not really filtered. I only ever use the price and volume. It's filtered to above 100. And it can play. I've got this stuff muted, but you can put this into do not combine. That means you're seeing everything not combined, obviously, for single order types, or you can have same price and type, and then you can then set your filters and stuff. I'm assuming you already know this. But for other ones that don't, you can set this so it will show up, and you can put alerts. So if you want to know, right, when's 100 lot traded, so what we'll do is we'll put the same price and type so you guys can actually hear it, and I'll need to unmute the alerts. So if you do get a bit of a fright when they come in, I'll probably get a fright, not you guys. Yeah, exactly. I use time in sales and treasuries, but not in ES. So what have you got? Sorry. So you've got formula alerts for the DOM. So you can set it for each specific type. I have it set up where I have it normally for do not combine data, just because it rings my ears if I have it same price and type. I'm just trying to show it as an example. And I have sweeps different colors as well. So these are sweeps where the market is essentially sweeping through the price and skipping it essentially. But it should pop in and let you know if there's some size. Let me adjust this so we can see if you guys can hear it. So we'll make it 20 just as an example to see if we can get it to go off. So this should be going off in a wee sec if I've got the setup on. And maybe not do though. But yeah, you get the concept, man. You can go into your alert settings and change it. That was before I had 101 clip. Yeah, and then I had to do not combine. Yes size, hit the bid, and yes size, lift the offer. You can create your own sound things on there if you want as well. So the thing you need to understand, Martin. Yeah, I'm with you, SP, with you. So basically, what makes a market volatile is effectively how thin the book is, right? And the real reason as well, retail does not move the markets in any way, shape, or form. It's institutions and big firms that are moving the market, you know, because retail is maybe trading what, three contracts tops in NQ, you know what I mean? So whereas ES is much thicker. Look, you can see there's 100 bids, and it's actually a little bit thinner today, to be honest. A little bit. It's normally a little bit thicker in the recent three ticks. But you can see it's normally 100 bid in each price on ES. If you bring up treasuries, it is so thick. It's like 2,000 bid, 3,000 offered, for example. And it's just to do with the volatility as well, because NQ is like much higher in price. What is it, like 18K or something? All right. Um, it's just got a lot more room to move, and it's just done because it's tech stocks. And the thinner the book, the more volatility there is. I think NQ is probably one of the thinnest markets. And can you guys think of a thinner market? I mean, your gold and oil, or CL and GC, is are pretty thin markets as well. Commodities are hard to trade. I'm not a fan of gold as an asset in general, to be honest. I don't think, if you're in the US or the UK or whatever, or even in Europe, I just don't see how gold is ever a good investment. It's done nothing for like 10 years. It's just been in a range. It works as a transfer of wealth, if your economy's terrible in the country you're in, and it's a hedge against inflation, 100%, it makes sense. But as an actual outright asset class to long and hold, it's not great. No, that's because they will be setting the prices on there, right? For NQ, but it's just much thinner. There's just never ever been as much liquidity on it. It's because it's a much higher price. It's the same as the DAX. So if you've ever looked at the DAX, it's the same. It trades the same as NQ. I mean, don't get me wrong. You sometimes see like 30 and stuff, but But NQ is just a. It's because we're seeing each tick. If you combine the ticks, it doesn't look as bad. So look, there's someone showing 100 lot there, right? That's a big firm, obviously. This 55 and 3/4, there's someone flashing 100 lot, and then they've just pulled it. See that? Right now, they flashed 100 lot to engineers, people to buy, and then pulled it. And people say that spoofing doesn't happen. That's clear spoofing. Why would anyone flash that and then pull it in 5 seconds? By the time I even finish my sentence. What's the objective of them doing that? It's just to engineer liquidity. That's all it is. And you would never ever know that without looking at the DOM. Never. And the reason why they do that is because it puts other algorithms in motion to buy. You know, see that? They just flashed that in ES for 5 seconds. This is the games that they're doing. So you need to think about what they're doing. They flash that in ES, so you're thinking, right, are they trying to drive more sell positions, right? And what you need to think of is they could actually be want to work the bid. It could be the same firm that's flashing here. They're trying to engineer sells, but they actually want to get filled in the bid, you know? So notice if the market does get up here, are they going to reload that level or not? You know? This is the type of information that the DOM gives you. You should be paying attention to all this type of stuff. Heck, it could even be the same firm. They flash 100 lot on NQ on the bid and then flash it on ES. Very strange, man. Very strange. And also with NQ, because it's such a volatile asset, it moves about 4 times the amount of VS. Probably more than that. So people don't trade as much size. That's the reason. They don't need to trade as much size on it. So hopefully that makes a little bit more sense, Martin. And also the timing sales can be used just to tell the speed of the tape. You know, so if it's busy, this will be going really quickly. At the moment, it's not. You can see it's going a little bit quicker now, but this sort of grinding through just means that there's not a huge amount of volume that's happening. And you can see every single order that's coming through. Are you still in your SP? Sorry, SP. You still in your trade? I think you were. Did you get it out or did you take a stop? How did that trade go? It's a scalp. Nice one, buddy. Very nice. Right, we'll clear the delta here. We'll also clear the DOM as well. See the most recent action. Let me know if anyone knows a button I can clear them all at the same time. That would be quite handy. See, someone commented in one of my videos saying there was, but not that I know of. There was a hotkey where you can clear every the recent bid volume and ask volume in a with one hotkey. That would be quite nice, but I don't see it's happening. Wow, he swept through there. NQ is going as well. Still right at POC. So we could go back up here, back into the range. I mean, we've been in this range now, guys, for my 2 yellow lines now for, what, 20, 30 minutes or something? No problem, Martin, no problem. But honestly, everyone seems to start in NQ because it's fast. I think it should be the other way around, you know? Once you learn flow and learn how market orders come in, start in thicker markets where order flow is slowed down so you can take your time, and if you get in a bad trade, you can scratch it pretty quickly, you know, and not be 10, 20 ticks offside at the blink of an eye. It's better to start with a slightly thicker market. And Gavi's just became a supporter. Much appreciated, Avi, sir. Supporter of the channel. If you've joined Discord, we need to upgrade you to the coffee gang. Thank you very, very much, my friend. It's much appreciated. So look at this delta on today. 26k. We'll close this time in sales. No, much appreciated, brother. Well, we want some action. There's not going to be action here probably. You know, we have our 15 minutes of algo fame at is it 10 to 4 US to 5 past 4 US. Martin, if you've not seen that, this is the first time you're tuning into a live session. Wait till you see the volume that comes in those 15 minutes. It's crazy. Craziness. We might do a session actually with the heat map. That would be quite interesting. It would be a good point. I used to use the heat map a lot, but the trouble is it's hard. It's quite demanding on your computer. I've got a good PC, mind you, but you know it's hard to have a heat map up, a market profile, 4 DOMs, you know, a standard chart with volume profile and delta. It gets a bit much. You need to pick one or the other. So I used to trade with you know, the heat map like a version of bookmap before, but I just prefer to, I get all of that from the DOM anyway. I just much prefer having the raw DOM where I can, if I'm really zoned in, I can focus on exactly what's happening. If we're to, really surprising how we're pretty much still in balance for the day, right? Yet we are plus 26k. I mean, the amount of absorption on the offer today is crazy, crazy. And if we do over the next, what will be interesting when you see like this, when it's say plus 26k, when we're really, really aggressive on one side, I would make a note to check the open interest. And I'll put a link. I'll put a link in the Discord or in the chat after this video. So So here we go, as we're actually saying that, there we go. There's got to be some long liquidations, man. There is no way there's plus 26k delta today and we don't have some long liquidations. We want to see some pain. Right, and as we said, the plan of attack here is we're now out of value, right? We want to see them aggressively hit into this level, which would be great to see. Right, and then if we do crack the initial balance low, they need to break the initial balance. And then if we do hit it with some size, we should see an instant sweep and then come down to this overnight low. So we want to see that play out. Yeah, exactly, man. It could be. Because the market, so when you're plus 26k delta like that, obviously that's not retail, right? So the market's not moved, and we're kind of, well, we're pretty much at break even, but we're slightly negative on the open, right? From the open now. Um, and yet there's plus 26k delta. If buyers, if sellers get aggressive enough and the bid is pulled, there is going to be blood in the streets today. And it's going to happen fast because there's nothing that moves quicker than a selling market. And when I see that, it makes it slightly less appealing to then potentially fade this, down here. But we'll see. What's the chances in the last hour that we're going to absolutely smash these levels? Because below this, as we said, we've got a higher volume nodes. So if we draw this on the volume, the market and volume profile, below the low of the day, so roughly in here, this sort of range. Now that is a tick range. What are we looking at? It's going to be quite hard to... Yeah, so you've got about a 20 tick range here. So if they do decide to hit this, so do you notice that the buyers have been all the way down here? They've been flashing on the bid. They've just pulled it. If sellers continue to get aggressive and whoever is absorbing on the bid stops, there's going to be some trouble for buyers today anyway. That's typically how I look at things, right? And Martin, if you see POC rising or falling during the day, does this mean value is going up or down? So there's a typical value range. Wow, it's going. NQ is going. If it can, let's look at the amount of absorption here. Can it go? They're really trying here. It's whoa. So we've just seen there, like an NQ, there's, the guts have got 150 contracts absorbed over, what's that, 8 ticks, like 2 points, right there. That's what SP was saying, is you need to basically combine the tick data, which is correct. Because you need to know that that happens, because that's just absorbed. That's quite a lot of absorption on NQ down here. If that cracked, then if sellers continue to do get aggressive, this squeeze is still on, and it's going to be hard and fast. Yeah, they're aggressively hitting into the bids at the moment. Drilling. Yeah. This is looking like it's going to be pain if we continue this size. Now watch, if we can crack this level, this should go quickly. If we can crack this initial balance low, if this low traded area, and there's going to be a shit ton of stops below here. So let's see if they can hit it. And also they're flashing here as well to try and generate some more. The sellers are just not stopping. This is one-way traffic at the minute. Here we go. Right, let's see how quickly it goes. They need size to come in. Let's see how quickly it goes. We've been calling this for the last couple hours. Here we go. There's the size coming in. So we want to see them break this level and then take it just to below the low. So break here, which is the low of the day, so the low of the RTH, which is where I think my line is. I already had that drawn out. And then there's the low of the day. So when it's this close, you might as well wait for the sweep of the low and then take it back in. But they're still aggressively hitting into the bid at the moment. But you're able to see why I was saying that this is a low traded area. If it cracks here, it'll go quick because there's stops below here as well. So we're starting to see buyers get interested here, which is a good sign. I typically am still waiting for this to come down to this region down here. But we've been calling this, guys. This is typically how the market trades. Well, not typically. This is the type of information, and when you stare at the screen enough, you can see this is going to happen. Now this is where you do not know what they're going to do. They've literally taken this down just a tick below the low of the RTH. Now they're reversing it back into value. For me to be interested, I would want to see them aggressively hit there and take this level and then bid back up. So not enough for me. Because my thesis is, if they short it down here, right, why would they not just drive it more and take some more liquidity down at this range? But it looks like they're going to go with ours here. But you guys get obviously the trade setup for that and how that happened, right? And that's where you use everything in context. You could see that the volume right there was basically one-way traffic. Sellers were aggressively hitting into the bid, just continual drilling into the bid, right? It was happening on NQ as well. There's another thing as well that kind of supports this is you need the Russell and the Dow to be going down as well at the moment. Okay. So NQ is going to be the first one to go. Can it go down some more? But you notice here we saw about 1,000 contracts absorbed at these prices. Just a shame. This is where I'm never going to be able to control it near you. You never know how far they're going to take this. In my opinion, normally when they take this down like this, it's not going to cost them very much more to take the liquidity down here. And just in my experience, the time that you'll take it early, they will slap it down. It's always the same. So you're better waiting for that to happen and missing the trade than not at all. But it looks like we're going to go down right now. NQ is trying again. So we are seeing them slightly defend this area. So the general concept in my opinion is if the market chops around high volume nodes and essentially uses it if it's coming into the level aggressively, it will use it as support or resistance typically. For low volume nodes or single prints, the first time it hits it, it will probably reject, right? But if it trades above it and it's an untested area, the first time it will hit into that area, it will normally flush through. And just the general sort of understanding and how I view the profile is ignore all this stuff you see. Just look at it in terms of like, I don't know, look at your local convenience store, right, where you would buy stuff, right? If they set, the price of a Mars bar at £1, and we'll use that as the fair value, if if the lower volume area for that is 10p or 10 quid, then there's not going to be anything traded at that price, and the fair value for a Mars bar is £1, right? For example, or $1, for example, right? And when the price gets say below 50 pence, people are going to buy everything there because it's seen as a valued price. If it gets above, if it gets above the the £1 mark or £1, then it's seen as overpriced, and then there's not going to be very much demand for that, and people are not going to buy it. You know, you can't sell the Mars bars to the convenience store, but obviously the demand is going to dry up. Do you know what I mean? You need to have every single thing in the world seeks a fair value price, whether you're selling donuts at a bakery or you're buying um, you're buying a loaf of bread at Tesco's or Walmart or whatever, or you're trading the S&P. Everything's the same. Everything has a price that someone is willing to buy at and someone is willing to sell, and what is fair value and what is not, right? And you may be thinking, well, how do you deem what fair value is? What I deem as fair value doesn't really matter, because I need Citadel and Goldman Sachs to also think that, right? So my and that's the reason why with the type of trading that I tend to look at is I look to get involved where these firms are going to start slinging large positions, and that's in indices anyway. You know, you've heard of the age old saying of people saying, oh yeah, put your entry where your stop would have been as such. You know, there's a lot of truth to that. And the reason being that people think there's a lot of stop runs that happen, it's not that people are chasing your stops, it's just that collectively as human behavior, if you're brand new to trading tomorrow and you pick up a textbook, they'll show you okay, this is, the market's making higher highs in pre-market, so it's just went to crack the high, you buy the breakout looking for it to go to the moon, it snaps back in, right? So you've got people buying the highs and you've got people stopping out. You get people shorted here, they're stopping out here, okay, and you get people buying the highs for the breakout, they then have to go out of their position as well, right? And then the market goes back down, we take the swing low here, then we go back up, we then do there's an exact same again. You're then seeing the market sweep higher, people that were shorting, they stop out, they've got breakout traders again, think it's going to the moon because they don't understand balance days, and then it rips it back into value again. It's just a collective behavior that happens all the time. And these firms, you need to start putting it into your mind where if I sat you down at this desk right now, okay, and said to you, you've got 50,000 contracts to execute on the long side today, right? What are you going to do? What would be your strategy? Because this is what Goldman and these large companies are paid to do. They'll get a call from a pension fund that will say, hey, we want to execute a block trade of 50,000 contracts. These numbers are arbitrary, by the way, but we need to execute a block trade of 50,000. Goldman's job is then to execute those contracts for them. And what they'll say is, right, we want to try and achieve an average price of this. Okay? Now, Goldman needs to execute those contracts in that day, but they also are trading their own book, and they're executing other stuff for other people that maybe be sell positions. They'll maybe be net short themselves, and the pension fund or block trade company that's looking to get their fills is looking to do that. So they put that into the desk, and because it's a complex block trade, they'll say, okay, John, I want you to go and execute 50k contracts. Whereabouts would you do it? This is where you need to start thinking of where it looks in the chart. You'd look at it and you'd say, okay, right, this 68 evens is probably the fair price for today so far, right? Now, they're doing this at open, so they can see, right, whereabouts is the fair price of the day so far. This was the fair price. So ultimately, they need to try and get filled in these long positions all day, okay? So they would be saying, right, whereabouts where are there going to be lots of people stopping out? Because people that are stopping out of positions, I can essentially get in my size. And you better believe they can drive price to that to get those orders filled. Does that make sense? This is typically how the market works. It's not just them taking we're going down here, NQ's just cracked the lows. But does that understanding make sense? Because that's part of their job. That's what they're doing. That's what these market making firms are doing as well. Now they're trading their own book for their own shareholders and their own capital under management, but they're also executing block trades. And whereabouts would you execute long positions if you had a ton of volume to trade? You would do something like this. Okay, if this sweeps here, we want to see what happens. I would be extremely surprised if this does not crack the lows here. Thanks everybody. More coffee would be great. If anyone would like to support the channel, it's much appreciated. Right, come on, size. Let's see if we can hit it. Would be extremely surprising if we reverse here. Here we go. Now the question is with this, is you never know, is when they hit into this level, when do you take it? So they should be going in here with some size, we should see some aggression hitting, and you want to see how they work it now. There's 300 here sitting at 50 evens. So there we go, we've taken it, it's absorbed that level. Okay, someone is absorbing right now. If this cracks, there's 600, 1,000 contracts absorbed in those two prices. Exactly what is happening. I've just said there's absorption here. If they cannot crack, if this goes, whoever is done absorbing here, if this goes, we're going to sweep aggressively. So this one large firm that's absorbing right now, okay, they've just done 2,000 contracts across these three prices. They are simply holding the market up. So this is an iceberg order down here. If they can crack this, this is going to go. But this is where you need to start thinking to yourself, okay, what's not great is the offer is also absorbing. They've just taken 600. If the buyers start getting aggressive, you then see a sweep. And this is exactly the type of behavior that you want to be seeing at the lows. Like this, right? And that's precisely why I was saying that this is where these firms will do it. They'll place their orders down here because they know people will be stopped and they can absorb all of that. They've just got 2,000 contracts. And then the market will tick back up 5 or 6 ticks or whatever, right? NQ's also going, so you've got the correlations helping you. Now you're then thinking, right, okay, what are we going to do? Are we going to go right back up, or are we going to go back down and retest? Because if they crack this level, we're going to drop quite aggressively. See, now they're not. They need to still hold. Let's see if the buyer is still willing to hold these lows. So it's a second attempt. So we're just watching. So we've now seen, they've got 2,500 contracts absorbed here, right? Maybe probably more than that now. We're about 4K absorbed just at these prices traded. So the sellers are not really letting up here. And they're trying to engineer it here. If this goes, it's going to go. I'm just watching exactly what's happening here. Okay, look at this. Tons of absorption here. Wow, look at this. This is a true iceberg. 16, 1700, 1800 contracts. If this level goes, this is going to be brutal. If this goes, sellers are aggressively hitting in 2,000 contracts. They're just not done. This one firm can literally stop the whole S&P. That's how much money these guys have. There's one firm that's hitting on that right now. Okay, so my opinion on this right now, if this does not go bid, right, they're now wanting to absorb and offer themselves. If this does not go bid from here, and this hits this again, this should go bid. If this comes down again and cracks this level, this is pain to the downside. NQ is also going. This should be going now if this was to go bid. Okay, you want to see the offer be pulled. They're still willing to absorb, which is not great, but buyers are chopping through. Yeah. Now if this comes down here and this dude is gone, there's going to be pain. So you have got some risk here if you are taking this, but you want to see this continue. You want to see this coming in, and you want to ideally see whoever is absorbing in the offer to be gone. Because the worrying thing is there's not that much negative delta to come in is come in here, and the market's dropped this much, which is very concerning. It's only 3k delta to get us here. So Mr. Trung, it's in the bio of the channel. If you go to the about section, I think it's in there. Um, if you click on it, it should be a link that doesn't expire on that part. I probably need to make this one the same. Okay, so let's see that this is not looking great. If this is now the third attempt, right, of this level. If this goes, and we've only really hit it by a tick. This is like 2 ticks roughly below the low. So, but they're still not. They don't seem to be done yet. But bear in mind, if this does go here, so notice that's now the third attempt. If this doesn't go bid, this is, you know what I mean, not great. You want to be seeing 15-20 ticks reverse back into the POC because we're now out of value. Look at the amount of negative delta at this one price, negative 2,695. Okay, and buyers just cannot seem to take this higher. This is going to go short. This is going to break this, I think. This is now the 4th attempt at the lows, and yet the buyers cannot seem to take it higher. This is not a good sign for selling. If sellers come in with some size here, they will take it. Yeah, try the one in the About Us section, buddy. Try that. It's a different link. Some of them expire. Jeez, man, look at the amount. They are. There we go. It's gone. Okay. So now that they've taken that and they've probably got these orders done, are they going to reverse it now? Okay. So now that they've got all their fills, they've now managed to get out of the positions down here. They've had their stops filled. This should now be going bid. If this comes anywhere near down here, this is now it. There we go. That's the type of motion you're looking for. There is the sweep. The offer is now pulled. That's the trade. That's your trade there. Job done. 15 ticks painless, right? And the reason why I was saying, because the two, I I just much prefer. I'm never really a fan of the 1 and 2 ticks, to be honest with you. I prefer it when the market sweeps it a little bit more and gives you a little bit more aggression. You know what I mean? But that's your trade there. Do you notice how the sellers aggressively took all of that selling in there, right? Buyers were just absorbing, so there was icebergs, and then they basically got the out of this level to get out, and then they started lifting in the offer. You know, my opinion now, if you got in long on this and you got up to the guts of here, you should be out. Trying to hold these, in my opinion, when the VIX is like this, going for all the way back into the range, all the way back up here, you're going to be holding it unless you're okay to hold it for like 30 minutes or something. That's fine, you know. But these ones you want to be taking the quick value that's given to you. Does that make sense? And this is essentially the sort of rough behavior that we've been talking about and expecting. And this is the type of flow that you need to be waiting for in the market. So it's not great that they're still willing to absorb at these prices, to be honest. You notice the offer was pulled all the way up to here, and then they just turned it on, and then the bid was pulled to get back down here. Sellers are still getting a little bit of aggressive. But again, there is a lot more short downside than there is upside at the moment. But again, we are in complete balance, and we have now just swept a low by, I think it's what, 7 or 8 ticks now. So I personally prefer just to take the 15 or 20, but if it's given to me without taking any pain, than waiting to hold this to come back to my entry and then potentially stop me. It's not great how the Russell and Dow are hitting the lows either. That's not great. And also all the massive volumes coming in the next 5 minutes. This is perfect timing. Oh, there's going to be a lot of money won and lost in the next 20 minutes, I can tell you that. Do you know just how to take the lows and then reverse it 5-6 ticks? It's so common. This is why breakout trading sucks. God, the Russell is just plummeting here. The correlations are not fantastic. This is not looking great. Does anyone get any questions? What are we thinking here? Type an L in the chat if you think we're going to finish lower for here. Do you think, or higher if you think we're going to reverse back in value? What do you guys think? Type an L if you think we're going to go aggressively lower, or H if you think we're going to finish back in the sort of 60s, 64s. Higher, nice. Yeah, so the volume's going to come in the next 3 minutes, which could literally reverse this entirely. It could also absolutely hit the floor. But we're now in this sort of higher volume node in the POC, so we should see buyers start getting active here. But the correlations are not helping. NQ is just plummeting. It'd be interesting to have tick strife open to see what size is happening in individual equities. But this is now a key level right now. We're now at this higher volume area here and on the profile. So we will see if they're gonna drive it down. But again, there's still 22k positive delta. So there's going to be a lot of long liquidations if they just continue to get aggressive. So 2 minutes for the volume to start coming in, and this could literally reverse on a dime. Gee, this is gonna be a bloodbath. Here we go. All of the long liquidations are now going to be coming out. We're going to clear this and then let's check the volume spur. This could reverse in a dime here and go right back into value. Whoever is done hitting into the bid, if they start stopping, this could reverse. We've now hit the initial balance extension. This is basically double the initial balance. And this is the hard thing about this, and it's just part of it, the fact that there's so much positive delta today. However though, it's a good place for big firms to get long down here. And the volume's going to come in the next 10 seconds. Oh, you love the selling, nice. Yeah, so this is. I mean, the fact that there's just been so much. There's been about 5k, but notice now there's a bit of flush of buying coming in. The markets went bid, and it's instantly absorbed and slapped back down. So if they take out this low, an M period is always wild. It's always a wild session. This in the next 15 minutes is going to dictate what's going to happen here. If the market's to go back into it, this should be reversing on a dime and doing it pretty aggressively if we're to go back in. The market should not be retesting these 38s, in my opinion. If we're to reverse back into value, but this should be happening pretty quickly. They're trying. Yep. Okay, they need this to hold. They need to try and hold here. Yeah, everything is going up. And this is the hard part, is knowing how far they're going to drill it. That's literally the secret sauce. How far are they going to drill this? You know? That's where I think if you do get in and you get your 15-20 ticks, you should just take it. Because if you've got the balls of steel to ride this all the way back into value, then well done. So there we go. We're pretty much there. Near enough now. We're now back above the low. And all the people that steamed in short, thinking that this was going to the pits, are now stopping out, and now you've got a cascade of them. If they continue to aggressively buy, there's now going to be stops that are run, and then before we know it, we're back in value. The hard part is knowing, like I said, how far they're going to drill it, and timing it is the hard part. But they do this all day, just at micro ranges, at highs. You know, they've done this, and this is typical of a balanced day. We've just aggressively took all the stops down here, and then we're probably going to end the day somewhat back in this sort of range, you know? Clockwork. Oh, you closed your short position. Well done. But you may think this is how the market works. It does this, and it aggressively takes levels and then just goes back into where perceived value is. Does it all the time. Especially when in this bell curve day, the market wants to get back to the fair value, which is the sort of 64s, 65s today. Nice. Nicely done, buddy boy. Kali. I use 30. 30, you can go with 20. I would say probably 20 because to show the size, it's up to yourself. Somewhere between the 20 to 30. There's no point having it any less than 20. I take it you're obviously asking that question. You know, to go into the minimum market by order quantity or whatever. Look at the size. We are right back in value. Look at that. Crazy. If that is not just textbook stuff, I don't know what is. Well, we've been calling the sweep, but it's hard. It's hard to time the sweep, of course. But this is the type of behavior that we were expecting. You just never know how far they're going to drill it, right? But now we're right back in value. I can't see us getting back down to hit the lows now. We're probably just going to go back. If we can go back into initial balance low, this is just taking everyone's long position and then finished. And then now we took away about 5k negative delta, and now we're near enough back. There's been about another 3k delta added on. So it'll be interesting to see if they just balance out and fill out this sort of, the out of value area. But yeah, we were saying this, to be honest, that the fact that the delta was really positive, that there was a lot to the downside, but my plan of attack, when you're in balance like that, the market very rarely will just continue dropping and end out of nowhere unless there's crazy news that comes out. Wow, NQ is just some real size just come in there, hitting into the bid. Crazy, crazy times. We've still got the 2 minutes to win at 9, where the market can probably go 20 ticks in those two. I include overnight SP. The reason I do that is just so I get to see if overnight was effectively net long or net short, and it kind of helps my view on the sweep of overnight high or low, to be honest. And pretty much I'm generally looking to fade, to be honest. If I was feeling, see when we got to that level, that was a good short. See when we're talking about the market drilling down and into that low volume area, that was a good short. But 1k off. It could potentially be session times. Could be that. Yesterday the value area on both volume profile, market profile shifted lower. So I was holding whole day right from Asia open and just closing out. Oh wow. Well done, buddy. You took a bit of heat then, I take it. Took a little bit of heat on that. So let's see what happens in the next minute or so. When this volume comes in, it's going crazy at the moment. amount of volume that comes in these like 5 minutes is madness. Yeah, I'm glad you enjoyed it, man. Glad you enjoyed it. I'm probably gonna call it in the next 5 minutes, bros and broettes. That's pretty much us done now. I think we'll just fill out this area, to be honest, or probably more likely go back into some sort of value area for the day. But that must be us pretty much done. So I hope everyone has a great evening. I'll be chilling in the Discord. If anyone wants to ask any questions, feel free to join. Also, I've got the link there to, if you want to show some extra support to the channel, feel free. And I'll probably be live tomorrow for Happy Friday Day, and we can close out the week. So see if anyone's got any last questions before we look to end the stream. But you guys have a great evening, and we'll catch you tomorrow. We'll be on probably roughly at the same time tomorrow. But until then, you guys stay green. Hope you have a good trading session tomorrow. Okay? Peace, everyone.